Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, the global mining industry is back to the boom period. Brett Kebble's cleansed Randgold Exploration heads back to the JSE, and diamond demand is now fully back. With commodity prices and mining revenues returning to record 2007 levels, the global mining industry has essentially returned back to the boom, a PricewaterhouseCoopers executive said last month, highlighting that growth was largely driven by demand from Asian powerhouse China.
All seems to indicate, that they're predicting an 8% growth rate off the back of a global slump. If you just go and look at the way, the pricing for things like iron ore and coal is being determined at the moment, I think that's all on the back of big pushback from Chinese buyers. Now I don't think the final word on pricing has been spoken. But certainly a mechanism that was there for many years has been pushed aside in favour of something else. Not finally signed off and agreed on into the future, but it would appear like they will be in this market and will be driving the demand side of things for quite a few years to come.
The sanitized Randgold Exploration mining company of the late Brett Kebble is heading back to the JSE after shareholders voted overwhelmingly in favour of a settlement that unlocks a value of 1.4 billion rand.
We've got platinum, we've got iron ore, and we have to decide what to do with these. We obviously have done a lot with them already. We've done a lot of work, we've done some prospecting, we've actually done some drilling as well. We're very conscious of our cost and our budgets to keep it as low as possible, but we've done a lot of work and we've got a fair idea of where these could go. But they're in such a range of industries that I can't tell you that I'm going to focus, or we're going to focus on gold only or anything like that. We're looking at any opportunity. By the end of June, we'll be distributing a significant amount of Goldfield shares and JCI shares to our shareholders, and we'll be left with a company that has approximately 550 million rands plus of cash, some upside in prospecting rights, and we have some legal claims that we still have to deal with and review our strategy on that point. So we've got a company that can trade again at a fairly nice price, and we hope to add a lot of value in future.
Transtech CEO Llewellyn Delport says that diamond pricing is close to pre-crash levels, with demand fully back.
Pricing is almost at the levels of the average before the crash. Demand is fully back, and we anticipate both demand and pricing for our South African quality of goods to maintain going forward. The graded market is declining, and our intention, like we have done in the past, is to counter the decline in grade by increasing plant throughput. We're planning to do that by keeping the cost base and the cash base tight. We've done it in the past, and our plan is to actually continue doing that. Our cash position from our perspective is strong at year end at 246 million. The cash balance would have been 307 million if the 10% lots that are in dispute at the State Diamond Trader were sold. We have begun to sell the 10% lots that have been tied up, and I can reasonably report that from a financial perspective, this issue will not actually run into the numbers going forward in any significant manner.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.